Good afternoon, and welcome to today's Smart Investing Briefing Friday. Can't believe it's Friday already. And today we had payroll reports come out, job reports, and all I can say is like, wow. We're going to run over these numbers for you. The headline payrolls up 134,000. That's below the estimate of 185,000. I'm going to say that's it for the bad news.
Yeah, that was it for the bad news. And at first I saw this, I was like, really? I was kind of surprised, but you got to dig down into the nitty gritty, I like to call it, the deeper numbers. You know, August was revised up to 270,000. That's up from 201,000. So big revision there. That pretty much covers the miss from the headline. And then also July was revised up to 165,000, not 200, 165,000, up from 147,000. So good revisions for the last 2 months.
And Chase, we can't forget about too that Hurricane Florence happened during this time frame, and that hurts restaurant jobs and retail jobs. So I think it kind of threw the number off a little bit when you look at the averages, as you said. Looks very good going forward there. Unemployment did hit 3.7%, and important, participation rate is unchanged, so that's looking pretty good as well.
Yeah, 'cause sometimes you get a little phony numbers, I guess, for the participation rate will decrease and the unemployment rate will decrease, but not the case this time. Also 3.7%, down 0.2%, lowest unemployment since December 1969, almost 50 years. I mean, that's quite a milestone.
Yeah, this is all great news. The problem is now employers are having a harder time trying to find qualified employees because we're almost at full employment at these levels. So that's going to be a problem we're seeing with employers going forward. Also, average hourly earnings up 2.8% year over year. I think that's going to even get higher as things get tighter.
Oh, absolutely. I mean, we've seen some good wage inflation. The other thing to consider, though, when you're looking at benefits, I mean, that's kind of a new thing in this economy. You look at, paid time off, that's increasing. You look at, paternal and maternal support, taking more time off for that. You look at flexible schedules, people working from home more on Fridays. You look at Google and Silicon Valley, the type of benefits you get for working there. So you're getting a lot more in non-wage benefits, but also seeing some increase in normal wages as well.
And then lastly, people saying, well, why all this good news? Why is the market down? Well, the market's down because rates are going up, bonds are down, and it's because of the fear of rising interest rates going to cool everything off. I do like to quote Larry Kudlow. He said that the other day, this is not a sugar high. This is going on. This economy is going to be strong for a long time. So these short-term pullbacks, I think, are great times to invest. So I'm loving this. Yes, those pullbacks were okay.
And I think this is the highest the 10-year note's been since 2011. So that's kind of what's spooking the market. But I think we're at 3.22% on the 10-year right now.
That's what I saw last time. Yeah.
What were we at back in 87, was it?
Oh, gosh. They were like 8%.
It was a lot higher. I mean, so we're still pretty low on it. I think until we hit about 5%, you're not lured into the bond market from the stock market. I think we're okay longer term in the stock market.
So we will summarize it. Everything is fine. Don't worry about the stock market being down. That's okay. There's great business going on. You're going to see higher earnings. Trade is coming together. So a lot of things coming together. Great employment report. Tune in tomorrow morning at 8 o'clock on AM 760 KFMB with Brent Chase on the Smart Investing Show.